Hello and welcome to this CNBC Africa special programming. We are coming to you from the Johannesburg Stock Exchange today. It is the largest stock exchange in Africa, markets a valuation of around $1.3 trillion and of course the 16th biggest stock exchange in the world. The reason we are here, of course, is to extend some of the conversations that have been taking place at the 15th BRICS Summit currently underway here in Johannesburg. Conversations around increasing the level of intra-South to South economic participation for more sustainable development and inclusive growth. The conversation that we're having specifically is the role of capital markets in driving that growth, not only within the BRICS cluster themselves, but also amongst the broader global South, many of whom are lined up and are queuing up to join the broader emerging markets club. I am joined by my respective panelists on stage, who I will introduce to you in just a short while, as well as a room, an auditorium that is full of audience members who are also keen to engage and debate with us this afternoon. But with that said, I'll introduce the panelists right now, beginning with the gentleman on my left, Mr. Langa Mangele, who is the head of equities and equity derivatives over at the Johannesburg Stock Exchange. He is seated next to Mr. Rami Aldukani, who is the executive chairman of the Egypt Stock Exchange. We also have with us Mr. Leslie Marstop, the chief financial officer of the New Development Bank. And last but not least, Mr. Saki Zamkaka, the acting group CEO of the Gauteng Growth and Development Agency. With those few words, I'll be getting the conversation on the road. And Langa, I'm beginning with you, sir, because I wanted to ask you specifically about the role that the JSC is playing right now in driving or helping drive South Africa's economic growth, as well as supporting the broader national agenda. You told me that you will answer that question. However, you want to stack up the investment case for emerging markets right now. So please present that to us.
Yeah, thank you very much, and good morning to everyone. I thought that I just want to tee us off and maybe take a step back, because most of us here have gotten very accustomed to talking about emerging markets, the good and bad of it, their risk assets, and so on and so forth. So I'll not get into that. But in the 80s, if some of us will recall, is that the emerging markets as a group, there was no term called emerging markets in the 80s. Our countries used to be referred to as the third world. And the World Bank, IFC, arm of the World Bank at the time, was attempting to put together a fund which, to investors' dislike, they had named the Third World Fund in order to drive capital formation and investments of foreign investor flow to emerging markets. So because the term was distasteful, it was decided that maybe the emerging markets sounds pretty better. So hence why we have today emerging markets. I thought I'll just take a step back there. But when you look at the reasons behind that, it was to profile developing countries in order to make sure that global capital is able to be channeled for development in those areas of need. So fast track to where we are today, the emerging countries as a group are sitting in a very different case. In the 80s, collectively, the countries in the emerging markets were commanding about less than 50 billion US dollars of market capitalization. That figure today is above 5 trillion. Of course, it's still very small in terms of percentages. If you look at it globally, emerging markets account for just 12% of global equity markets. But their GDP has grown quite strongly since then, from 37% in about 40 years ago to about 58% today. So the seat at the table and the conversation around emerging market is no longer that of a basket case, is that these economies have diversified. Most of them are leaning less and less from commodities, heavy industries, utilities. They now have tech companies that have emerged out of these economies. They've got their consumer goods as well as services economy. So it's a very different case altogether. But the challenge of channeling investments still remains. So that's really the lens I thought would tee us off and have a conversation. Thank you.
Okay, now let's stay then. Let's stay then in EM space. And Rami, how are you looking at the challenge of challenging investors? Just looking at the profile of the Egypt Stock Exchange right now, where the dominant participants are locals, are Egyptians. You've also got participation from the Middle East. But in terms of crowding in further foreign investors and convincing to them the investment case for being in emerging markets in this environment right now, what would your message be?
Perfect. Thank you for having me in your lovely city. I love being here with you. The case of emerging markets and the case of Egypt is not totally different. They all share the same symptoms that we've been seeing in the last couple of years. If you study the continent of Africa, you'll see a lot of the exchanges are struggling because of the macroeconomic factors we're seeing. We're seeing monetary policies tightening. We're seeing interest rates are hiking. This is affecting everyone here. The problematic thing that we have been seeing lately is the instability of exchange rates that we're seeing in the continent and emerging markets. And definitely this is adding several challenges for all of us in order to attract international investors. International investors, if you have a fluctuating exchange rate regime, they'll definitely they will start asking for discounts or pre-order discounts before coming into the markets, which is not the case or availability in all our markets today. So what we're seeing and struggling as emerging markets in the last couple of years is not a case of Egypt, but rather a case of the entire African continent, I will say, as well as many countries in the Middle East. What we're trying to do actually is to try to crowd in more local investors in order to provide more liquidity to the market. Once you start crowding local investors into the market, international investors will start looking into the inflows that's happening. They'll start looking into higher market capitalization. The problem with Africa, for example, that all of our market caps, except for GSE, for example, all our market caps are very diminishing for them, especially if you have devals of your local currencies every morning, for example.
Sure.
Then our market caps are going down. Asset managers will not look into these markets, will not start study. Analysts will not allocate resources for studying single stocks on the market. So the challenges that we've been seeing because of the macroeconomic factors that is out of the control of any CEO of any exchange of us, but rather that we have to play a closer role with policymakers in our countries in order to try to market to international investors what's happening. International investors basically need clarity and need certainty. So the biggest enemy for any exchange in the world is keeping your investors in the dark and not telling them what they're doing. If you have a problem, just go out there and say, okay, we have a problem. We're trying to solve it by 1, 2, 3. And this was the approach that we're doing in the Egyptian exchange, and we're communicating that through the Egyptian cabinet as well. And I think a lot of exchanges are doing the same because it's I claim that we do not have fundamental problems in our markets, but rather than macroeconomic factor that is driven by what we're seeing with the geopolitical situation globally that's been affecting all emerging markets at this space. So providing certainty and clarity, maybe providing repatriation mechanisms for foreign currency to international investors. So you have to be creative, you have to be honest, you have to be certain, provide a clear message to everyone. This will drive more international investors to the market.
Leslie, you essentially preside over a bank, the New Development Bank, as the vice president. Many people call it the BRICS Bank, essentially. It's a bank that is very heavily exposed to the emerging markets, a story right now, just by virtue of its members and even new additions that have come through. Your take on that and perhaps how the BRICS can leverage better the opportunities of tapping further into capital markets.
Thank you very much, Fifi. It's good to be on home soil. And good morning, everyone. I think maybe just to kick off, I think the New Development Bank, as you know, was created 8 years ago. And it really was premised or built on the business model of all the development banks that have existed for the last 70-odd years. Most of our capital come from the capital markets. Capital markets is an important conduit for us to raise money from which we then we use those funds to on-lend. We obviously add a spread so that the bank can remain profitable, and then we on-lend to state-owned enterprises, to governments, and so on. The bank was very well capitalized with $50 billion from our member countries, and that enabled us to obtain a very high credit rating. Today, New Development Bank is one of the highest rated from a creditworthiness perspective throughout the emerging markets world. So one of the critical things we're doing now is to increase the local currency financing. As you know, when we started out, we established a very strong footing in the Chinese renminbi market, where we have a $6 billion equivalent program. It comes to 41 billion renminbi of bonds that we have issued so far, and those funds have been used to build, airports, high-speed rail, solar projects, water projects, and so on. We're very pleased that we were able already in 2019 to register a program on the Johannesburg Stock Exchange in 2019. As we know, South Africa is blessed with a very well-regulated exchange that is highly rated globally, 16th in the world, as you mentioned. So we've been able to register that program 4 years ago already. And a week ago, we managed to do our first issuance of 1.5 billion rand. So we intend to become a regular issuer here in the South African market, because the government intends to finance a lot of projects in South African rand. In short, what I'm saying is that we see the development of local capital markets as a critical role for us to play. We're very blessed also that we are headquartered in China, where the Chinese interbank bond market is the second biggest in the world. Obviously, China is a massive $17 trillion economy. So we're very much dependent on that access to the capital markets. And so Africa has already got very deep and liquid markets, and we hope once we now have new members come in, Egypt, for example, have joined, we hope to study the Egyptian market more closely to look at the potential to issue there. But our next entree into the local markets would be India, where we are in advanced discussions now with the regulators to register a $2.5 billion program over 5 years. And we're hoping to tap into our first issuance in rupee before the end of 2023.
Okay, I think that will be a welcome development, particularly from the Indian delegation in the Indian market. So I could just your take on where you do see the opportunities for the BRICS, and perhaps even now the broader global south that are wanting to be a part of the BRICS, where you see those opportunities for them to leverage further capital flows into their respective markets.
No, thanks, Fifi. I think, if we go back to basics, and as the topic, if you're going to have growth, whatever indicator you take of driving economic growth, capital is going to be one of the variables that you need to it. In the developing economies, we know that access to capital generally has been an issue, and how diverse even that access to capital is, and we hope it will be more diverse than this panel.
Well, I hope I represent the equity.
Yeah. So basically, the main issue we have to drive is that, if you look at South Africa, big business, it's easy for them to have access to capital in the capital markets. There's even liquidity, so it's easy for you to trade in those shares, or even shareholders to get in and out. But mid-cap companies not only battle with liquidity, but at times even battle to raise capital in those markets. So having institutions like the New Development Bank, who are even raising capital in local currencies, de-risks the foreign exchange issue you're talking about, but also makes it a little bit cheaper. Because what's the point of capital that's available but it's not accessible or is not economically viable? So if we're really going to have the growth we hope for in the BRICS countries, and that's the issue in South Africa. So we have deep capital markets, but when you look at who has access to them, it's still maybe the top 40 companies. So that's really what you want to change. You want to scale up the small and medium companies for them to have access to capital markets, but also allow regulations to make it make sense. Because, institutionally in South Africa, a lot of the funds can only invest in listed equities, but even in those listed equities, there's a sense of, we need this track record, we need that performance, we need this, we need that, which often doesn't work for medium companies. So if we are to have new champions, new big businesses, it's really capital markets that are going to drive that.
Sure, which actually brings us to the first question around the growth. and the role that the JSE is playing in supporting the growth of the South African economy and the broader national agenda. I mean, while Saki has rightly pointed out, you, in a sense, do need growth of the economy to be happening for the capital markets in and of themselves to be a lot more capacitated. But in this event where growth hasn't been happening and has been pretty fragile, coming from the pandemic, coming from all the other supply-related shocks, what role does the JSE see for itself in facilitating that growth and particularly the national agenda?
Yes, thanks for that question. So the role of the exchange remained really focused on capital formation primarily in the listed market. But what probably many people may not be aware is that we have evolved, and I'm looking at Sam standing over there. He's our head of deals and origination. He's leading a business unit that has set up JSE private markets, because we have seen that that's an area of growth, to Saki's point, that it is easy for established rated businesses to access capital markets, but you find that in the private space where you have small to medium-sized businesses, for example, if you take the most popular company in South Africa is Nando's. It's not listed, operates in many markets globally. But if they were to need capital, they will have to go via a different route. So our role as the SM Exchange is to organize capital and make sure that we match investors and entrepreneurs. And we have aggressively pushed into the private market space because we feel there is an exchange that is value that we can add. We bring credibility, we bring governance that investors are looking for, which is a safe harbor for people to go sleep with their sound minds, knowing that their capital is not been given to the sharks out there. So we are organizing the markets. We are organizing the markets wherever capital is needed. And we will continue to drive our focus in the listed space, but we are growing and pressing quite heavily in the private market space. So that's just one area.
Okay, so let's maybe stick with the SMEs, because small to medium enterprises have been given quite a lot of prominence at this BRICS Summit. In fact, it's been said that without them, the sustainability of BRICS and the expansion in and of itself can't happen to the same vision that the leaders see. So Rami, I'd like to find out from you about maybe some of the innovations that are happening at Egypt Stock Exchange to capacitate and enable a lot more SMEs to participate in the local markets.
Sure. SMEs in Egypt represent a bigger portion of the economy, and they drive
like everywhere
in
the world,
especially on this continent. So we have to be a little bit more focused. I mean, if you interview any CEO of any exchange, they'll tell you, okay, let's look at the big fishes, the big tickets, let's increase our market caps. One transaction can grow your market cap significantly. But if you look at the sustainability that you're seeing with SMEs, it's a totally different story. So we've dedicated a special board or a special market for SMEs with a little bit more of a relaxed listing requirements and maybe disclosure requirements. We're trying to change some of the criteria, what to consider an SME, what not to consider an SME, and go to the main market. However, what we're working with them now is how to make them grow and transform from the SMEs market to the main market. And we're working closely with them on different angles in order to make them ready and better suited for the main market. We're working with them on disclosure requirements. We're working with them on ESG requirements. We're working with them on how to access finance and all of that. Especially, most of SMEs on the African continent have problems in accessing credit through local banks. This is a problem everywhere, and we've seen that in Egypt. So they will be relying on capital markets and equity financing through capital markets heavily. And maybe at a certain stage, debt capital market products will definitely kick in for such a category. So this is one angle for normal, plain vanilla SMEs. And then we're looking into the tech-enabled startups. This continent is very rich on startups and tech startups. I'm sure South Africa have a fantastic environment here with the entrepreneurs and the tech startups. However, they still do not favor or shying away from public markets. So we're looking into creating a qualified investors board that would allow qualified investors transact on tech startups on certain tickets with less relaxed listing requirements and disclosure requirements. and trying to convince entrepreneurs and startups that they will need at a point of time to start cleaning up their books and actually disclosing the true value of their companies and actually disclosing how they're actually making money. Because what we've seen, especially in the Middle East, all VCs understand that when you're transacting on a tech startup, by 80% the number that they're seeing is, and they want still to transact. But at a certain point, we need to educate entrepreneurs that the data they provide to public markets is key. It has to be clean, it has to be actuals, it has to be tabulated in a certain form that would serve the purpose of it.
Okay. Okay. I'll just make sure that the director of this program, Sean, has made a mark there just to ensure that he puts a B when you... But, so I'm glad that you raised the issue around the access to capital, and particularly maybe for the thriving startups in the fintech space who actually do have their books in order. They've got their books in order, but there is a certain level of conventional thinking in many parts of the world, in many parts of the continent and the BRICS grouping in providing them with the capital either to get going or to scale. So why I say that I'm glad that you raised it is because we've got a banker on the panel. And Leslie, I'm asking you to draw from your previous experience, obviously even at Goldman Sachs and Merrill Lynch, but more specifically the role of the New Development Bank right now. So right now, you mainly support or lend directly to governments or the state-owned entities. But as the bank does grow and move forward, what is the thinking around providing access to capital in local currency to SMEs within the grouping and perhaps even the new additions like Egypt?
Sure. Let me start by saying that our core value proposition as a bank, like all other development banks, is to raise capital, as I said, in hard currencies, because that's where the deepest pools of liquidity resides. And we can raise money at the lowest cost of capital, as I said earlier, because of our high credit worthiness. However, in order to be really impactful, looks like this thing is off. In order to be really impactful into the longer term, we need to be able, as you say, to provide financing for your small, medium, and micro sector. That is not a space that the bank operates in. However, we are beginning to construct very strong partnerships with national development banks and national financial intermediaries. In South Africa, we have the Development Bank of Southern Africa as a strategic partner of the bank, with the Industrial Development Corporation, the IDC, as a partner of the bank. So we want to use those institutions as intermediaries. For example, we have made loans to the DBSA. We've provided a $300 million facility. That is specifically earmarked for energy, because energy is the single biggest constraint on growth in South Africa. So a lot of independent power producers are financed by the DBSA, but the funding actually came from the development bank. So we're not taking individual project risk of a project out in Priska or in Uppington in the Northern Cape. So we are looking for ways to do that, meaning we play the role to facilitate and capacitate your local financial industry. The Africa Development Bank, for example, have partnerships with most of the banks on the continent. We hope to do the same in future, where we can partner with ABSA, with Rand Merchant Bank, with Nedbank, with all of these institutions with deep roots into the SME sector. So if we can make financing or trade financing available, we can aid and facilitate that process. And then finally, I'd like to also say that we increasingly want to make use of guarantees, because the biggest challenge facing us today, to be honest, is to mobilize more capital for development. One effective way to mobilize capital is to provide a guarantee. So we have a very high rating, a AA+ and AA flat from S&P and Moody's. We can use our high rating to provide a guarantee, so we're not giving the money, we're just giving the pledge that we stand good for that particular loan or that particular facility. We want to use the guarantee product going forward to enable your local financial institutions to have access to deeper pools of funding from the New Development Bank.
Okay. Saki, I just want to draw from your experience as CEO of the Gauteng Enterprise Propeller, which is a hat that you also wear. And so the Gauteng Enterprise Propeller is essentially a financial institution of the Gauteng Department of Economic Development that promotes the development of small businesses, as it were. And so you've heard some of the things that the JSE has done in trying to support a lot of the companies in the private markets with SMEs, connecting them to capital to grow and scale. You've heard a bit of what Rami had to say, the stuff that was... Anyway, we'll move on. But as for... as for your honest feedback and opinion on how supportive some of the inventions and innovations happening at the JSE to support SMEs are right now, what would you say about them? And would you add any areas where you think stock markets can improve in doing so?
You know, let me maybe start on the other side on regulations. In South Africa, we've had a conversation for many years, and I don't know why it's taken this long, about amending what's called Regulation 28, which is basically about how much capital you can allocate where. And the issue for me really is risk capital and where in South Africa you can find a pool of proper risk capital. Capital is there. But if we're going to be conservative about it, there isn't pain anyone is willing to take. That's where the problem is going to be. So let's take, you know, Langa talks about $1.6 trillion of capital, of market cap. Let's take 1% of that. It's $16 billion. You can afford to take 1% and provide it as proper risk capital. And I don't mean recklessness. Risk capital where you're able to give payment holidays, the interest rates are cheaper. You're taking a bit more equity because banks can't take equity. There's high cost of, you know, capital allocation on what is perceived to be risk capital, funding feasibility studies. I mean, we're seeing on energy where Western countries and you know, Europe and the US are actually literally funding in the developed world feasibility studies that are not done. So I think in the developing markets, the thing that is very strange, we have very low risk appetite. I mean, look at institutional funds. We have in South Africa, just take the PIC, more than 2 trillion rands of assets. 1% of that is 20 billion. You can literally afford to risk 20 billion properly. We've done it at GEP that you mentioned. We were given by the province 250 million. We took 200 million of that, partnered with the ITC, set up a 400 million fund we called the Township Economy Partnership Fund. But why that fund worked was that we then, as the provincial government, took 20% first loss. So we effectively, Leslie, were a guarantor into the losses. So if you have to price in a perceived 30% loss on investing in startups, you know that the 20% is practically subsidized. So you allow people to take a little bit more risks, but it also means the pricing is not going to be crazy and make it unaffordable. And we were then able to have partnerships where we had implementing partners that can fund, and we say to them, well, we kept the interest rate to this much. You can't charge beyond this, whether it was, you know, rentals in township markets, whether it was purchase order funding. So for me, I think the big thing in the continent, we tend to be overly conservative, even where we have decisions, and we place a burden on regulated institutions to take risks they can't take when the levers are with government to be able to change certain things. As I'm saying, I mean, the most foolish thing we've not done is to actually allow pension funds to put money into development. So where is the development going to come in? Where are the medium-sized businesses going to come in? Because some of the cost of regulations, so Rumi, I mean, if you're a small company, do you really want to be paying auditors a lot of money to audit your books? You may have an accountant that keeps your management accounts in order and you audit once a year, but you're not going to take, in the case of South Africa again with dominant business, you're not going to take a big four audit firm that is going to charge you a lot of money to put your finances together. So there is a cost of regulation that's not feasible at a certain point, but at that point there isn't really anyone willing to put in that money. So whether it's the development bank, I think its success is going to be using the rating to make capital really accessible, whether in it being forex neutral or it being cheaper. If we give to DBSA money in the same terms as ABSA, they're gonna on-lend to everybody else at the same commercial terms. And then we have what looks big, but the impact is not there. And I think there are enough examples we've done, as I'm saying, like what we've done at GEP, to really crowd investment into micro businesses. Somebody has to aggregate and mitigate that risk, and that's why we have partners that implement onto it, but it's doable and can be done.
Okay. Are there any questions right now? Okay. So quite a few. Because Lizzie, you look like you had something to say.
Now, I was just going to really amplify the point that Saki has made. He drew attention to regulation as a constraint. I also wanted to say there's a deep-seated and conservative and sort of a risk aversion inherent in financial institutions. And he's correct in pointing out that we need to put in place appropriate financial instruments to take that first loss, to take that little bit of upfront capital that is required to improve the risk-return profile of a project, which can then crowd in your broader financial sector.
Okay. I think maybe also as a feedback for doing it better next time, definitely have a voice from either the Public Investment Corporation or a larger pension fund that can respond to the idea of potentially taking that 1% of the assets under management to invest in risk capital. But the questions, please keep your hand up. We have got a mic that will be going around for you. There's quite a few, so could I just kindly ask that we keep it brief so we can take as many as is possible. Thank you, sir.
Hi, thank you. Can you hear me?
Loud and clear.
Yeah, so I'm Avi Lazaro. I'm a UK South African entrepreneur. Last year we listed on the NASDAQ at a listing value of 1.2 bill. And even now and then, when we are looking to South Africa, African markets, people say, investors don't understand new technology, tech-enabled businesses, innovation. So I would like to know, one, how you can overcome that. And people always say, maybe for longer, JSE and some of these African markets in particular don't have liquidity. So investors and shareholders that want to sell, they find it very difficult. So I was wondering, as a BRICS synergy and collective, how you're going to overcome that, the liquidity question, and the understanding and PR around entrepreneurs and investors wanting to invest in the region. And of course, also just the understanding of institutional investors of these new tech-enabled businesses, which are so important and becoming part of the new industrial revolution. So thank you.
Most certainly, great question. Langa, maybe you want to respond to that real quick while we get the mic over to the next hand?
Yeah, happy to take that. So for the Johannesburg Stock Exchange turns over a day in equities $1.3 billion, so market cap of your size. So there is very deep liquidity pool here in South Africa, so liquidity taken care of. The community asset in industry in South Africa has already begun to realize that foreign investors are coming in and taking in companies because of a discount that exists in South Africa. And most of them, we interact with them, they're telling us that they're beginning to realize that they've left investment on the table for too long and they're beginning to come back. So these things require close engagement. How is the BRICS can help in terms of liquidity and accessing market broadly? At a formal level, BRICS stock exchanges have an MOU. So we do work well together. Two, I think we could take a leaf out of the Chinese market, where they've built what they call the Southbound Stock Connect, which connects the offshore market in Hong Kong with Shanghai to ensure that foreign investors can participate into mainland China. The Africa's Linkage Exchanges project is exactly that, to make sure that no exchange operates in isolation. Liquidity pools in Nigeria, in Casablanca, in Nairobi, in Egypt, in Johannesburg can be accessible by investors. So the building blocks are there, and there is momentum to implement on it. But for yourself, we do turn over 1.3 billion a day. So we will absorb that liquidity 100%.
So maybe a secondary listing over here, possibly. Yes, sir.
If it works, yeah, fine. My name is Oleg Preksin. I'm the Vice President of the National Russian Bank, and I'm participating in BRICS Business Financial Services Working Group from its very establishment in 2013. I have two questions. One is to Leslie Masdorp. he was saying that regarding the financing in local currency, which is interesting both for big companies as well as small and medium-sized business, you say that you have been quite active, as I understand, on Shanghai Stock Exchange in China, also actively entering the local market here in Johannesburg Stock Exchange.
Sure.
And what about the capital markets in India? You are start to explore. And what about Russia and Brazil? If you talk about the local currency financing and funding in the market. It's first question, and second is to the Johannesburg Stock Exchange, and maybe also take the opportunity to talk to Mr. Rami Al-Lakhani, who represents the Egypt Stock Exchange. So we have in BRICS for a long time the agreement between the developed institutions. What about the stock exchanges? Do we have something like some cooperation coordination agreement in force? If not, maybe it makes sense to explore the possibility. I'm asking because next year Russia is chairing BRICS and BRICS Business Council. Maybe it's one of the issues which can be discussed and developed. Thank you.
Sure. I think those are great questions. Leslie, you want to field the entry into Russia and Brazil capital markets?
Absolutely. The bank, since day one, as I mentioned, already had a strategy to have a portion of our funding raised in most of the local currencies. In 2019, I believe, we also registered a program on the Moscow Stock Exchange of 100 billion ruble, at the time probably about $1.52 billion sort of to make the equivalent. That program is very much in place. The bank hasn't tapped into that program as yet. And today, because of the international restrictions and sanctions environment, the bank is unable to do that. But in the medium term, it is certainly a market that we intend to tap into. Similarly, Brazil has very deep bond markets, capital markets, and we also intend to register a program there when appropriate. However, I should make the point that we try to make funding available at the lowest cost of funds, as I said earlier on, because that's really our value. Highly rated entity, low cost of capital. We can then provide funding at rates that are lower than what it would be if our countries raised it themselves. Because our countries, South Africa BB, Brazil BB flat, the bank 6-7 notches above that. So it is not always the case that it is better or more optimal to raise local currency. In some instances, we can simply swap our US dollars into the local currency in ruble or in South African rand or renminbi, etc., and then on lend at a cheaper level.
Okay, so maybe split the second part of his questions between the two of you. Langa, maybe you can speak from a South African perspective, just given the fact that South Africa is part of BRICS. Conversations around more coordination within the stock exchanges, and Rami, perhaps you can even add to it, just given the fact that the theme is BRICS in Africa. So conversations around coordination amongst African stock exchanges. Langa, beginning with you, sir.
Yeah, thank you. So at a formal level, as I've said, there is a BRICS Stock Exchanges a memorandum of understanding signed in force in 2012. So that cooperation level is there. Probably it's a convention that can be picked up.
2012, did I hear correct?
Yes, 2012.
Where are we now?
You are correct.
Okay, okay.
So it's there. So I think the other area, maybe just to let's lift our gaze a little bit up. The other area of, I think, deep concern for us as the JSE, and the CEO and the executive are spending a quite amount of effort in that, is to reorientate the South African economy from its traditional links with just predominantly the West. There's still a lot of that connectivity and flow, and there is very little when you talk about Asia Pacific or even South America. And there are investments. If you think about it today, for example, South Africa holds the largest reserves of manganese, and we have the automotive industry that is just at the cusp of depending heavily on that industry alone. In the DRC, cobalt comes from there. There will be no smartphone, tablets without that particular industry. But when you look at how the flow of funds and the capital and therefore the investments, there is still this deep anchorage that exclusively works between the South here in South Africa mainly and in the continent and with the West. There is nothing wrong, of course, with that. But we have to diversify our basket of interactions and really take the South-East interaction very seriously. So as an exchange, we have a strategy that works around that. So those are some of the practical things that we are looking at.
Okay, Remy?
As my dear friend have said, the blocks are there. But again, exchanges will always rely on banks in many areas. Okay, the money starts at the bank and ends at the bank. So the problem with creating sufficient cooperation between exchanges and with different exchange rates and different local currencies. I'll give an example. The ALP between the African exchanges, for example, started the first transaction late last year in Côte d'Ivoire. Egypt is part of that, but because of the situation that Egypt is facing, along with several other countries on the continent, with the hard currency, that we cannot allow, or we would not encourage the outflow of hard currency from local economies to participate in neighboring economies and not coming back. Thus, we will always need an intermediary bank, and we're talking with the African Exim, for example, on this particular project, how to create a settlement procedure for local currencies. So I can invest, or Egyptian investors can invest in Egyptian pounds here in stocks listed on JSE and vice versa. How could that happen? So we will always need this part of the equation existing. Without that, we will always have to depend on an intermediary currency, which is now the US dollars.
Okay. I hope you sufficiently answered. Okay.
Hi, good morning. My name is Tongwane Namane, and I'm with the SCS Aerospace Group. We are a satellite engineering company that is currently developing space infrastructure and actually the first and largest group of satellites, a constellation in Africa.
Congratulations.
And possibly globally. So my role is dealing specifically with commercial finance for outer space activities. My question is directed at Mr. Marsdorp and specifically around development finance institutions and risk. So we're, in terms of the South African market, quite small in size when we're going to look at our general partners in BRICS, which represent 40% of the world economy. And in terms of GDP, for the first time in the last quarter, third quarter, actually surpassed the G7 global GDP. I think it was something 35.1% versus 34%, which is historic. But my question relates to when there's so much interest in terms of development in South Africa and in Africa as well, the level of risk aversion is still really sitting there when it comes to what I'll call the missing block around private-public partnerships, where you have private companies that are able to develop certain levels of infrastructure. We have seen this in terms of SIDS, the Sustainable Infrastructure Development Symposium, where our largest risk that was identified had to do with bankability.
Sure.
So how does an institution that sits at a global stage, like the New Development Bank, being able to balance out looking at really bringing in some kind of local type of thinking, but local type of action, but with a global standpoint.
Okay.
We're playing on a really large market with trillions that are available and interest to invest. How do we unlock that in terms of risk aversion?
Okay.
And I think it's time.
Okay, agree with you, and I think that's a lot of people in this room. And Leslie, I think that you highlighted on it in terms of the current model right now. You did say that the bank, you lend directly to the government, to SOEs. You are working with development finance institutions like DBSA and IDC, who then go on to lend to perhaps companies like the lady is working on here. But is there anything you'd like to add based on her comment?
Let me just add, I think firstly, the bank has right now about 90% of our book represents lending to governments, to state-owned enterprises like Transnet in South Africa, Eskom, TCTA, South African National Roads Agency, and so on. However, the bank also lends to the private sector. Our aim is to lend up to 30% of our annual volumes. Annually, we lend between $4 and $5 billion, roughly. 30% of that we hope to earmark to the private sector. So the biggest focus going forward will be to grow that private sector operations. Now, how does one enable that? I think you kind of hinted at the fact that a lot more needs to be done to bring projects to a commercial bankability stage. And for that, we need to collaborate more with other institutions to do, for example, project preparation facilities. The Africa Development Bank and a number of other institutions have such facilities in place. We need to better coordinate those efforts so that we can take projects that do have real commercial logic and rationale, but they just need that sort of uplift and that initial funding to take it to bankable stage. In short, what I'm saying is that there is an effort within the banks. We've been directed by our shareholders to take more risk, and part of working with companies in the private sector is indeed embracing that role.
Okay, and especially in a sector like hers, I mean, we have seen a lot of interest amongst billionaires there, where Bezos and Richard Branson and was it Elon Musk is. I'm sure they wouldn't be in spaces that didn't promise returns on capital. So good luck to you, essentially. We've got the last question that we'll be taking, and then we'll prepare to close.
Thank you very much. My name is Lebo Konguluza. I'm the president of the South African Black Mining Association. And the biggest challenge that we have at the moment is that, as we understand very well, that South Africa is one of the biggest suppliers of the PGM metals, chrome, platinum, etc. But also there's a risk within our members where coal is being defunded in the process. And we have a lot of entrepreneurs coming up in that space. And capital is very difficult to access. And on top of that, it's a very capital-intensive space to mine, right? And I think we have managed so far to raise about 5 billion to assist black entrepreneurs in mining, which we are launching in the next week. But we wanted to ask, how do we access capital markets to make it easy for these black miners and entrepreneurs in mining to participate more effectively in mining the biggest resources that we export to the world, so that we can grow our economy as South African Africa with strength and more access to capital. Thank you very much.
Okay. Saki, I wonder if you have a view here, a bit far field, but we know that the coal industry is an industry that a few banks have stated they're no longer putting fresh capital in as of a certain date. And we're in Gauteng right now, and I just wanted to know the experience you have received in maybe assisting mining companies to access further markets, assisting mining companies like the gentleman has said in coal specifically, and what kind of feedback have you gotten, and do you have a view on the role that capital markets can play in helping?
Again, I mean, for me, I don't think the real issue is so much about coal, and I'll come back to that. The real issue is that you don't have risk capital in South Africa, and especially in mining. I mean, when you look at the past 5 years and how many greenfields projects have been done in mining in South Africa, in the developing economies, we probably have the lowest rate of greenfields projects in mining across the board. So even the bigger mining companies are not putting money into new projects. And that's because it's a long process between you being licensed, prospecting, until you are at a point where you can generate money. So for me, that's the real problem, that across the board in the mining sector, there isn't enough. The ITC has a mining fund, but I also don't think it's taking as much risk as it should take. So your real issue generally, as I'm saying, is that. Then you have banks, which I think, you know, if I were to put it in local lingo, by papa, you know, with this, with this whole transition into green energy. But even if we accepted that they're going to want to move faster than they should, because, I mean, we have coal for days, we have enough reserves, and it's getting cleaner. So there's no reason why coal shouldn't be part of the mix of energy, that because we're gonna have it anyway. So whether banks are in it or not, if the development finance institutions were putting in money and with enough risk capital in mining, I mean, we've seen now with the whole geopolitical dynamics, coal picked up, prices picked up, everybody was selling coal. So I think if you talk to black miners in general, the real issue is access to greenfields funding. Those who partner with bigger companies are able to do it. But as I'm saying, you have ITC that does fund that. I don't know, from the private markets at JSE, whether there's any of those, and the view of BRICS, of the BRICS Bank. But I wouldn't imagine New Development Bank with members who actually still are commodity heavy, having a very conservative view on mining coal. But that's the real issue for me.
Okay, so for our foreign friends, BIAPAP essentially means they are being unnecessary, if I can translate it verbatim. But I think it is also important just to defend their position, because right now even the BRICS grouping are having discussions on the just energy transition and what that looks like. And we do know that some of the banks, particularly those that are listed on the Johannesburg Stock Exchange, are accountable also to shareholders who want to know what they are doing in playing their part in the just energy transition. So to outsiders, it may seem, unfortunately, that they are being unnecessary, but as listed entities, they are accountable. But that is a conversation for another day. What I also wanted to tell you is that, even on the JSE itself, there are a few coal mining companies. Tungela is one that is shooting the lights out right now. And I can say that, in my humble opinion, it possibly will be quite hard for you to get new capital to scale your business, and perhaps a strategy you should be looking at to grow is conversations around merging and partnerships with some of the bigger players who are already in that space. Just my 2 cents. And unfortunately, however, we are out of time right now for this particular discussions. I know that there's a whole lot more conversations that can come out of this, and I do hope that you do take the opportunity to stay on and network and engage with some of the various speakers and pose your comments and questions that you didn't get the opportunity to ask. But I am pleased at the fact that we are essentially in agreement that the capital markets do have a role to play in driving growth. There are innovations underway to ensuring that they can further accelerate that growth and further drive inclusive growth to include smaller to medium enterprises. To my panelists, I'd like the audience just to help me in giving them a warm applause for their participation today. And to my panelists, actually, I would like to ask you to give me, or to help me give a warm applause to the audience for their participation. And with that said, that does bring us to an end to this CNBC Africa special, coming to you from the Johannesburg Stock Exchange today. Thanks so much for watching. It's a goodbye for now.